Hi, I'm Andy Jones. Welcome back to VideoCreditScore.com. Today's question is, how much do consumers really understand about how credit scores work? And the Consumer Federation of America did a study on this, and let's jump right in and take a look at some of these statistics. Well, first off, 28% of people knew that 700 was approximately the lowest score that they could get the best rates of credit for. So this is not good, that most people don't understand sort of what's the score cutoff that's going to get them to the best rates. And it's interesting that they chose to use 700. I think 760 is really the cutoff, and that's what should be studied in terms of how many consumers really get that that's the case. But it's interesting that a lot of consumers just don't understand. Let's see, 31% knew that the score represents the risk of not repaying a loan. A lot of consumers thought it meant something else, but really what the credit score is measuring is your ability to repay or your likelihood that you're going to default. So let's talk about some potential good news. Well, 67% of you knew that balance payments, a large payment would actually increase your score. So that's good that most people understand that. It's still alarming that a third of us don't really get that that's going to be something that will really help your score to make a big payment on your credit cards. About 60% of us know that landlords use this to make decisions about apartments as one factor. A little bit more than 60% of us know that insurance companies or insurers use credit scoring as a decision factor as well. So again, I guess that's good news that more than half of us know, but boy, there's still a lot of room for improvement here. So let's take a look at some other factors. Well, one of the things that's really interesting, WAMU was the partner in this study with the CFA, and they found out that a 30-point increase would actually lead to $28 billion in savings in people's interest rates and their payments. So this should be a real charge for us to see if we can actually get that 30-point increase to really save that money and really get the best rates possible. So what are some of the other statistics that are in here that are a little bit interesting? Well, a lot of people actually thought that income was a big influence in your credit score, and it's not. They also thought that things like age and marital status were contributing, and again, those are not factors in the credit score. I guess if there's a good piece of good news is not many of us actually thought that ethnicity was a factor, because it's not a factor. So that is really, I think, a good sign that a lot of people understand that that's not in there. But we've definitely got some work to do to educate on these other factors to make sure that consumers really get that. So in a nutshell, I'd say, the good news is that we're getting more educated. This is definitely an improvement over the 2005 study. The 2007 study showed that we're actually getting smarter and more educated about this. The bad news is this is not happening quickly enough, and it's not enough education. So we've got to really start moving forward. So one really good place to come, that's our site, VideoCreditScore.com. We hope you come and start getting educated today.
Remember, everyone's situation is different. Be sure to contact a financial advisor or a credit counseling professional before making important financial decisions. This video broadcast is for educational purposes and not a substitute for receiving personalized professional advice.